Exchange-traded funds, or ETFs, have become increasingly popular in recent years, and for good reason. ETFs are a type of investment vehicle that track a basket of assets, such as stocks or bonds, allowing you to gain exposure to multiple investments with just one purchase. One of the biggest benefits of ETFs is the ability to diversify your portfolio. By investing in an ETF, you can gain exposure to a wide range of assets, such as stocks, bonds, or commodities. This can help reduce your risk and potentially earn higher returns. Another benefit of ETFs is their low cost. ETFs typically have lower expense ratios than mutual funds, which means you'll pay less in fees and potentially earn higher returns. ETFs are also very liquid, meaning they can be easily bought and sold on stock exchanges just like individual stocks. This makes them a great option for those who want to be able to quickly and easily access their money. In addition, ETFs offer investors a way to invest in specific industries or sectors, such as technology or healthcare, which can be difficult to access through individual stock purchases. But it's important to understand that ETFs can also come with certain risks. One potential downside is the risk of over-diversification. While diversifying your portfolio can be a good thing, it's important to make sure you're not spreading your investments too thin. Another potential downside is the lack of active management. ETFs are typically passively managed, which means they simply track a basket of assets rather than actively buying and selling assets. This can be a downside for those who prefer active management. It's also important to keep in mind that ETFs can be affected by market conditions just like any other investment. While they can be a great way to gain exposure to a wide range of assets, they can also be affected by market fluctuations. That being said, ETFs can be a great option for those who are new to investing or who want to build a diversified portfolio without having to spend a lot of time researching individual stocks. Additionally, ETFs are a great choice for those who want to invest in a specific sector or industry without having to pay the high fees associated with actively managed mutual funds. Furthermore, ETFs can also be a great option for those who want to invest in foreign markets or emerging markets. However, it's important to keep in mind that ETFs may not be the best option for those who are looking to beat the market or those who want to actively manage their investments. It's also worth noting that while ETFs may have lower expense ratios than mutual funds, they can still come with certain costs such as bid-ask spreads and brokerage fees. Another important aspect to consider is that ETFs may be less tax efficient than individual stocks, which is something to keep in mind when planning your investment strategy. It's also important to understand that while ETFs can offer a wide range of benefits, they may not be suitable for everyone. It's important to do your own research and consider your own investment goals and risk tolerance before making any investment decisions. Another important consideration is that ETFs can be more susceptible to market manipulation and insider trading due to the ease of buying and selling them. This highlights the importance of due diligence and research when investing in ETFs. Another potential downside is that some ETFs use complex financial instruments such as derivatives, which can increase the risk of the investment. It's important to understand the underlying investments and the level of risk associated with the ETF before investing. Additionally, ETFs may not always perfectly track the underlying assets they are supposed to, which can result in performance discrepancies. This highlights the importance of monitoring the performance of your ETF investments. It's also important to note that some ETFs may be more susceptible to tracking errors, which can occur when the ETF does not perfectly track the underlying assets. This highlights the importance of researching the ETF and understanding its underlying assets. In conclusion, ETFs can be a great way to diversify your portfolio and potentially earn higher returns. But it's important to understand the pros and cons before making a decision. Be sure to do your research and consider your risk tolerance and investment goals before making any investment decisions. With the right research and due diligence, ETFs can be a smart investment choice that brings in steady returns. However, it's important to keep in mind the potential downsides, and to be aware of the potential risks involved in ETF investing.